thank you for joining me, gentlemen, on stage. Just to kind of set the scene, I'm looking at the world through slightly different lens today than I was before COVID. We are imagining a pre-COVID world and a post-COVID world, particularly in terms of brand development, but particularly in the hospitality industry as a whole. We see that the post-COVID world is a kind of anachronism. Or the pre-COVID world, I should say, is a kind of anachronism, meaning that if you imagine the world before COVID, you imagine the way we traveled, imagine the way we stayed, the way we lived, which has become a bit of a cliche. We're imagining a past which is slightly antiquated, which is slightly different from the post-COVID world. We're seeing that in macro indicators, in terms of geopolitical change, in terms of economic change, in terms of the way that we traveled and other forces. I'd like to frame that argument sort of as an introduction or an exposition to the panel. The way that we're looking at Asia is also changing, and the three leaders that I'm blessed to have with me on the panel this morning represent broadly, although also other parts of the world, three significant areas significant parts of Asia. And if I ask Dillip first, and who of course is the Chief Executive Officer of Minor Hotels, of Minor International, embracing the Anantara brand and many others in the NH brand. But if we just ask Dillip to look at the Southeast Asian lens and look at the way that Southeast Asia has rebounded, the forces, the changes that are happening in Southeast Asia, we've come out very slowly in Thailand. Why?
It's a good question. I think if you look at Thailand, Thailand's had many challenges every year, and normally if we don't have a catastrophe, there's something wrong. That's how Thailand's been. We had bird flu, swine flu, SARS, the bombs, everything. But I think the first year of COVID, I have to say Thailand was in the top index in terms of managing COVID, because we only had 70 deaths and for the whole year. But it's where we dropped the ball was the second year, and it was a complete catastrophe, like in terms of, getting the vaccines and getting the timelines and opening up the country, because, this whole thing about the whole COVID thing, it's as a global pandemic, they just shut down the whole thing, and that has actually caused a lot of issues, both politically, economically, and also for the people as well. It's created a lot of hardship. And I have to say, and Thailand was one of the last countries to open. We only opened in July, on the 1st of July, with some restrictions. But now, it's starting to open up. So I think that's where, we actually dropped the ball compared to, I always use Dubai as an example, compared to the Middle East and the Maldives, actually. Maldives was the first country to open in August, and look at what happened. Maldives has had such a huge surge in terms of tourism and hospitality and all those things, and Dubai has benefited a lot as well. I think, the way Dubai has actually handled the whole pandemic has been fantastic. So there's been such a big contrast in terms of managing the pandemics. I thought, us being in Asia, and gone through so many of this and seen this before, been there, seen it before, but actually it was a little bit disappointing in terms of, not being proactive and actually seeing some of the best practices which Dubai did, and also some of the European countries did in terms of getting the vaccines and getting the country opened up. I think if you look at Dubai, they never printed any money compared to Europe, some of the countries, and compared to the US today. And we see the backlash and the aftermath of that. in terms of a global economic crisis today, and whereas Dubai is still enjoying the boom and the upside and everything in terms of tourism.
Fahad, thank you, Dillip. Fahad, the Middle East is a massively changing dynamic. It's going really, really fast. It's eclipsing to a point in when one imagines Asia or the deconstruction of Asia, but the Middle East is its own kind of beast, as if, for want of a better word. It's its own being. How much is it eclipsing the rest of the world? How much is that a function of geopolitical change, of economic change? Where do you see it going?
And I think I'll start off by picking up on the thread that Dillip left. From one point is how we responded to the pandemic, which was very helpful. Dubai is a great example that Dillip mentioned. We took the early lead of coming out of this pandemic quite strongly. We had a lot of tailwind that helped push the market to the forefront. Healthy competition is something that has been very favorable. The region is growing. The demographics within the region help as well. There has been a huge shift to domestic tourism, staycation, and so on and so forth. So there's a lot of elements that is pushing forward the market as a whole. So one of the key elements was the pandemic made us reflect back on the priorities of the region, priorities of our guests, priorities of the markets that we are serving, and also helped bring the whole industry forward. We've been also fortunate that we are in an area that has a strong protection from the inflation that's going through the rest of the world. We are not completely sheltered from it, but we are less impacted by it, given that there is a lot of dependency on our own domestic consumption.
How much are you buoyed in the Middle East by Saudi? How much is the region buoyed, is driven by what's happening in Saudi Arabia?
It definitely is a huge
It's a game changer.
It is a game changer. And again, I think that is another positive that has come through. The shift in the approach that Saudi has taken in tourism and the focus that it has placed on tourism and creating new destinations, be it Neom, Red Sea development, Amal, and so on and so forth. It's really pushing forward how the rest of the investment towards hospitality is taking shape. Us as operators also benefit quite significantly because we need to stay in the forefront of what's happening in this region.
Right. Puneet, if we turn to you and we turn to India, booming. Unbelievable numbers, unbelievable returns, unbelievable results. Also, obviously in the Maldives as well, as Dillip mentioned. Unfortunately, Sri Lanka, I guess, will be a while before it comes back. What are the forces in play? What's going on?
First, I think let me just add to what Dillip said. Besides Dubai and some other countries, I think managing COVID with 1.3 billion people and supplying vaccines to the rest of the world, I think India, for me, has emerged much stronger and far more respected than pre-COVID. And the ability of India to do a reset during this phase, in general, but hospitality in particular, has really helped India to surge ahead. Of course, it has certain benefits. It has a very strong domestic base. The recovery is led by both leisure, initially leisure, now also corporate, and really on the domestic front. And what we are seeing today is a 20% increase at a minimum across board, across all brands in the sector compared to what we call the 1920 figures. So if you have had on top of it some not like for like growth or growth of your portfolio, you're actually much better positioned because the hotel industry had that once in 100-year opportunity to address the cost issue. We've had a lot of costs, which is like a nice to have. We still have some, which is nice to have because that's the kind of business we are in. But we have rationalized it a lot, both at a fixed cost base and a variable cost base. And that's, I think, really fueling the return on investment, that is fueling the free cash flows, and amazingly supported by developments across various dots on the maps we have, including 3 Taj properties in Dubai, and the latest one. I mean, I think we have our owner sitting in the audience, and it was very first month EBITDA positive. I mean, it's not that easy to achieve that. So I think there were some green shoots, as horrible as COVID was for the sector, as bad as it was for us also as a company, but we have emerged stronger.
But what are I mean, broadly to all of you, but I mean, maybe Dillip, we ask you first, what of the phenomenal increase in the cost of debt, the phenomenal inflation, huge inflationary pressure, and obviously the rise in energy costs. What is the short term? How are you, not just in Asia, but also across your European portfolio and elsewhere? How are you seeing the short term future, given the immediate economic challenges?
I think in the short term, we will see some bumps on the road. I was just with our team in Madrid, with the NH team, and just came back to Dubai. And we see there are both, I think what I say is that there's going to be some permanent cost increases and some is going to be temporary. And if you look at on the temporary basket, I think it's going to be energy, because I think it's surged. And the energy cost has actually gone up. Like, in the UK, it's gone up 3 to 4 times. But it's good to see some of the European governments actually starting to take some measures to curtail the cost increases, both for the consumers and also for the businesses as well. So there's going to be some temporary challenges in terms of energy costs. But the permanent features is going to be inflation. And the biggest one is going to be salaries, wages that's going up. Anything from 5 to 15%, the wage cost increase. Your operating cost increase everything is going up, driven mainly because of energy and fuel crisis as well. So that's driving inflation and others. And of course, then we have the other one is the interest rates. And interest rates is as a result of inflation to try and curtail inflation. But also, when you look at Europe and the US, there was a lot of money being printed during COVID. In trillions of dollars was printed, and same as pounds and euros and everything. And you see how the currencies have tanked today in terms of the pound, in terms of the euro, and also the dollar is strengthening because of the interest rates are starting to move up. So there's going to be some challenges, like what I would call temporary challenges, but I think there will be some, it's going to be permanent. And then we all in the industry have to be ready to actually try and move the needle up from a revenue perspective. Because today, the airlines, I'm sure you guys flew from all over the world, like you're looking at least a 2 times increase compared to pre-COVID. People are happy to pay, and one of the things I said, for the Maldives is our energy cost has gone up from 75 cents to $1.30. And I said to our GMs, we need to introduce something. We need to be proactive. And we can't that gets eaten up by the profits. So some costs have to be, you need to curtail that back and, to introduce what the airlines used to do in the old days, a fuel surcharge. And then you introduce a fuel surcharge, and then when the fuel prices go down, you take it out. It's not that you're trying to rip your guests off. It's just that you're trying to sustain your business in the long term. So that's what we see today.
Puneet, how do you were saying just before that there's benefits to cost, but there must be obviously the cost of debt and the currency escalation are challenges. Yet, and I'm sort of serving up a nice one for you, but yet you've had these incredible returns.
See, anyway, thanks for that. There's a famous Morgan Stanley analyst. He called this RRR, the 3 Rs: recession, rates, and Russia. Things like this keep happening. They come and go. Contrary to what Dillip thinks, you put in a surcharge. My experience in life has been any tax that comes or surcharge, it comes in easy but doesn't go out easy. It stays there forever. I think how you use adversity as an opportunity or any kind of crisis, what we did was we went for a different capital structure. So we took out the entire debt through a capital raise. So there is just one payment left, which we'll make of a debenture, but today we are net positive. So I think, and building in free cash flows so that when the next, as a cash flow reserves, so when the next crisis comes, you don't have to get into that debt spiral again. So I think those kind of strategies depends for each company, each portfolio, they work differently. What's your ownership base, what your strategic options are.
Right.
And we, especially with the Taj brand, we always take a very long-term view. It's a 120-year-old brand, and we take a view of next 50 years, 70 years, 100 years. And I think that's good that way, because that's really what the name stands for. It stands for the crown, or for the crown jewel that you have. And that worked well for us. So I think we are very well positioned today to take advantage of all opportunities and all kinds of opportunities that may be available in the market through our diversified brandscape, but also in light of the growth in the business and the profitability that we are witnessing.
I'll come back to the brands in a moment. And you know I wouldn't leave that. Fahad, in terms of the incremental inflation, incremental cost pressure, challenges and cost pressures, here you're benefiting, I guess.
It's slightly different for us in this part of the world. Increase in energy prices gives a good coffer for the governments over here to increase spending in tourism, in infrastructure, in services, and so on and so forth. So we've seen quite a bit come out from that. We're also fortunate that, yes, inflationary pressure does impact, especially we are very import-driven, so there is a bit of pressure over there. But because of a huge focus on our domestic consumption, domestic market, we haven't been impacted as heavily as other regions of the world have been. The one thing that I have to agree is we're facing pressure on manpower, but for very different reasons. There's a huge fight for talent in this part of the world. So when we talk about great resignation, we see some impact on that, where we are working strongly in creating a very strong culture within the organization to retain the best of talent. But because of the new investments that's going into this sector, Saudi, regional players, pouring a lot of money, that is one area that we do feel a bit of pain in. But the rest of that has been less impactful. And we've been, on the contrary, if you look at our portfolio of 50-odd hotels that we manage, it's green in majority of these properties.
Gentlemen, I mean, we have a few minutes or some minutes left, and it would be remiss of me if I don't speak about my favorite subject. And in a pre-chat before we were, Dillip was talking about how Minor International are taking Minor Hotels into the consumer realm. I'm very familiar, obviously, with all of your brands and where those are going. I always speak about brand equity and the percolation of value into the top. Dillip, how difficult is it, given the strength of the Anantara brand, and obviously I think we know where we're going with Puneet afterwards, but given the strength of the Anantara brand, how difficult is it to establish Minor Hotels? And why have you done it? 1 minute.
I think it's important from a customer perspective as well, because the guests actually don't see just Anantara, but today they see the brands within Minor Hotels, which actually are in different segments. You know, we have Anantaras, we have NH Hotels, we have Avani, we have Tivolis, and then we have Oaks, and we have Elawana, which is our safari brand. So actually, when we were small, when we were minor, it was easier to promote just the Anantara brand because we didn't want to dilute some of the brand values.
But you bought, when did you buy Oaks?
So we bought Oaks in 2011.
Right, so it's more than 10 years.
Yeah.
Why now?
So because when we bought Oaks, the first thing we did after a few years is to call it Oaks, from Oaks Hotels and Resorts. They are now called minor hotels in Australia.
Right.
We did that straight away. What we haven't done so far is the NH hotels, which is NH in Europe is called NH hotels, but actually it's not NH hotels because they actually manage a diversity of our brands. They manage Avanis, they manage Anantaras now, which we are introducing and all. So therefore, it needs to elevate one step up, which is under the parent company called Minor Hotels, and then it's easy for us to promote the different brands under Minor Hotels.
But you're taking Minor Hotels completely into the consumer realm.
Yes.
Mr. Chhatwal.
I think the audience should applaud the humility of this group. They become so large, and they still call themselves minor. we had that discussion before this panel, and Dillip's answer was, that way you don't become minor ever because you cannot be down.
We cannot be downgraded anymore.
Downgraded anymore.
Right, but you can't also avoid this question. There's a lot of brands in the IHCL brandscape.
Sure. So I think some traditions must be kept. What happens is developing economies or emerging markets tend to have people whose personal desires and ambitions and aspirations get linked to the highest brand in the portfolio, or the most respected one. Our founder, Jamshedji Tata, when he started this company, the logic was, he called it Indian Hotels Company because it was for the Indians, and India was colonized by British. For people to get into hotels was not that easy. And we have been listed on the stock market always as Indian Hotels. And it is so unique. I mean, you have that badge, you have that strength of representing and being the custodian of Indian hospitality to the world. So you should not give it up. That's one. Second, similarly as Dillip, this is an umbrella brand. It's a B2B. It's not a B2C brand. It allows other brands to grow. The easiest thing is you take Taj and put a little bit of Taj in everything. It will, in a short term, increase your revenues. In the long term, it will damage your crown jewel. So I think that's how we brought IHCL in a short form more into the forefront without advertising, without spending any money. And I think the world, especially the world within India, has now somehow accepted IHCL. It was very difficult to now take it back to Taj. So I think that's for us a mission well accomplished, if I may say so, Your Highness.
But if we turn to Fahad and to Millennium, those of us in Asia, particularly, I mean, Dillip and myself, particularly who live in Bangkok and are very familiar, obviously, with the Singapore market and the growth of Millennium and Chairman Quek and the whole story. And then we look at what you are doing here, and even Dillip opened his eyes with kind of awe and said, oh my God, 50 hotels. It's fascinating from many angles, but particularly from a branding point of view, because with your brand architecture, it's the product brands or that are creating the influence, that are creating that definition. How have you done that?
So very importantly, I think pre-COVID, like many other operators, we went through this expansion of adding brands to our portfolio. So this table goes all the way from ultra luxury to budget, lifestyle budget, so on and so forth. But I think the difference here is we had the opportunity to take a pause during COVID and just relook at what does Millennium mean?
Right.
Mean to us, mean to our guests, mean to our end users. And one thing that we notice is very important to really have a strong purpose. So people understand going back to any of our properties, be it at the luxury, avant-garde, or budget, to have something that they can relate to. So we ended up re-looking at our strategy and keeping the guests at the center of what we want to cater to. It's very easy to expand and grow and so forth, but the guest is our point of center, where we have brought all our values to cater to the guests, be it our people, be it our processes, be it the planet and how we interact with everything around us. So very importantly, having a purpose, having values that we really truly believe in, and making sure that all of our people are aligned to that is what's differentiating our approach to the market.
How do your consumers differentiate between Millennium in the Middle East and Millennium elsewhere?
End of the day, I think it's very important.
And how do you apply that purpose? I mean, I get it. I totally get it. I mean, I'm all over purpose, and I think there's nothing more important, and I think it's fantastic that you're imbuing purpose and values into the brand definition. But how are you differentiating, given it's Millennium or Millennium?
End of day, I think it's the interaction with the guests that comes through. We are, again, one thing that we always focused on was how do we get data, how do we get technology involved, how we get all the elements that put together to really push forward our knowledge of the market. But it means to not, if we're not able to cater to our guests. So within our own hotels, we have campuses that we run with all the GMs, where we run campuses with all of our directors of sales, director of HR, IT, finance, so on and so forth, where we instill and reinforce what we stand for and what the guest is expecting of us.
I'm not quite sure how much time. I think we have a couple of minutes left. Given your new brand architecture, or not new, but evolving, let's say, generously, brand architecture, where, Puneet, is, given the acquisition or the completion of Ginger, bringing it into the family, where's your greatest growth?
You know, Taj has to be selective. It is iconic, so it cannot be just planting flags. Ginger is a huge opportunity for India, so other brands would be mainly domestic, except for the neighboring countries around India. So the guidance we have given to the market will be scaling up, doubling, almost the Ginger portfolio over the next 3-4 years. We would be getting into our homestay, which is at 100 homestays today, to 500. Get a century with Taj. We're very close to it. So 100 Taj luxury properties would take us to like among the top in the world in that segment and positioning. Our platform, which we had created on selections, which is, like collection of assets which are very well established in their markets, is beginning to do very well, is beginning to grow rapidly. So, you can't say, I'm only going to grow this brand in a certain positioning. You need a very large scale. In others, you need to balance the quality. And in very special cases, you need to maintain that iconic status and not compromise it for just getting the dots on the map.
Okay, I have to cut you because I know Gemma's giving me signals. But let me just be fair to Dillip and to Fahad very quickly. Dillip, obviously, the minor hotels has changed dramatically over even the last couple of years. Where's the greatest growth and quickly in which region in sort of 10, 15 seconds?
For us, Europe, we see a huge potential now, especially with NH and introducing Anantaras and Avanis there. We see Middle East. We're now introducing NH hotels here in the Middle East. And we've introduced already Tivolis here also in the Middle East. And the third one is back in Asia, because that's also a huge growth market, both with China and India in the strong periphery as well. So that's where we see growth.
And Fahad, quickly.
Across the region, but very much focused on Saudi, the growth in Saudi.
In Riyadh or in secondary, tertiary? Across?
Across. Be it in the holy cities, Riyadh, Jeddah, as well as the new cities that are coming up.
Okay, ladies and gentlemen.
But David, I want to add, for the sake of the audience,
please,
for respect of the place, I would say for us, is Middle East and India. We are in the Middle East.
Right.
So mainly the UAE and Saudi.
And obviously the natural question, which I'm sure we probably can't ask, is other than Taj, would you bring other brands to the Middle East?
We'll see. If it's an existing partner, then yes, but our strategy is to stay focused on
Okay, I have to stop you. Okay. Ladies and gentlemen, please show your...